Z community, what is going on? It's your boy Tamer Azizz, and today we're going to be talking about filing your taxes when it comes down to your investments. So whether you're getting dividends, getting interest, day trading, swing trading, or even just the regular type of investments, today's video will cover all of what you need to know for tax season. So the first thing we're going to be talking about are capital gains. Capital gains just refers to whenever you are buying and selling something for a specific profit. It is a term that is specifically used for investments, and when it comes down to filing your taxes, it is line 12700. Now, capital gains is going to be referring to any type of investment, which includes real estate, stocks, or any other form of online investments. Now, capital gains is pretty good because rather than getting taxed on all of your profits, you only get taxed on 50% of them. Taking an example of real estate, if you sold a house for a profit of $100,000, you do not have to pay taxes on the full $100,000. You only pay taxes on 50% of that, which is $50,000. Now, the good thing about claiming capital gains is that you can also claim something called capital losses. Capital losses just refers to any type of expense that was involved in the selling or buying of the actual investment itself. Another example of a capital loss is when you actually sell an investment at a loss rather than for profit. Let's look at two different examples as to how capital losses can actually come in. The first example we'll look at is investing within the stock market. Let's just say that you were using a margin account and Questrade had to issue a margin call against you, forcing your investment to be sold at a loss. This is something that you can actually claim when you are filing your taxes. Another example is when you are buying and selling real estate. You might end up selling at a loss if your expenses are more than your profits, or if you just find yourself in a situation where you need to sell the property so you don't really make any profits from it. A perfect example of a capital loss are legal fees for when you have to buy or sell the house. You can actually claim this when you are filing your taxes. The next type of investment that you'll have to worry about is for dividend income. I've talked about dividends several times throughout the channel, but it's basically an amount that you get from a company because you invest with them. An example of this would be the Canadian real estate investment trust called Choice Properties, ticker symbol CHP. And another example is the American company Walmart, which gives out a dividend of $2.16 per every share that you own. The reason I mention an American dividend stock is because there are two different ways that you have to file if you have Canadian dividends and if you have foreign dividends. Canadian dividends, you'll actually have to file on line 12000, and for foreign dividends, you will have to file on line 12100. Now, the way that your dividends will be taxed really depends on whatever tax bracket that you are within. Tax brackets are basically just levels of where you are within the income spectrum of Canada. If you guys want, I'm going to be linking a chart in the description below that you can refer to so you can find out what tax bracket that you're in. Now, other than that, there aren't really any notable mentions other than the fact that if you are getting foreign dividend income, then you may be subjected to a withholding tax. So let's backtrack a bit to that Walmart stock example that I just gave you. Because Walmart is an American stock that gives out dividends, you will be subjected to a withholding tax. Now, regularly your dividend would be taxed at 30%, but because there's some sort of agreement between Canada and the States, you only have to pay 15%, which cuts in your withholding tax in half. Now, most of the time you don't really have to worry about this because your broker will automatically take that 15% withholding tax. But there are times where the broker doesn't do this and you have to factor in for this. The next type of investment that you might have to file taxes for is for interest income. Interest income is something that you will get from either bonds, high interest savings accounts, or even GICs. Now, there's no special consideration for interest income. It is just added on to whatever you made through the year from your job or whatever the case may be. Because of this, 100% of your interest is going to be taxed. Now, you day traders and swing traders are probably wondering where you guys fit on the spectrum. Well, I'm going to be frank with you guys, nowhere. Now, with the nature of day trading and swing trading, you are buying and selling stocks or whatever the case may be within the exact same day. Now, the CRA does not clarify what type of activity this is, which makes it a very gray area. After doing my own due diligence, because I'm a day trader as well, so I also have to file taxes, I've come to conclude that the CRA does not look at our type of income as capital gains. They actually look at it as business income. And because of this, 100% of our profits will be taxed rather than the 50% that is seen in capital gains. For example, if you made $20,000 of day trading income for the year, you would have to pay taxes on that full $20,000. Now for swing traders on the other hand, because there are times where people will hold for several weeks, if not several months, I would just suggest giving the CRA a call and be like, hey, what would you guys consider this, capital gains or business income? Do your own due diligence and try to figure out what's going on from your side so that you don't get in trouble. Another notable mention for those of you who actually invest within foreign companies, including the US. Now, when it comes down to filing your taxes, you actually have to convert the foreign currency into Canadian dollars and then file that to the CRA. The conversion rate that you're going to use is whatever it was for that day of the transaction. And apparently I've read on the CRA website that if it's been done multiple times, then you just take the average conversion rate and do it based on that. That's the general idea of how you're going to be filing your taxes for your investments this year. Now, question of the day is, out of all of these types of income streams, which ones are you going to be filing taxes for? Let us know in the comment section down below, along if you have any other questions that I would love to answer for you guys. Anyways, Z community, thank you guys for watching. This is me, Azizz, signing out. Peace.